Well, the highlight of next week, or this week I should say, on the macro front locally is the release of new monthly inflation report. That's on Wednesday, which comes alongside the wage price index, but the week kicks off with the RBA minutes tomorrow. Investors will be focused on whether there was a robust debate over the size of the last hike. Thursday we get the jobs report for July and the average weekly earnings report. Lots of data to consider there, and also across the ditch, the RBNZ poised to hike rates again. Is it approaching its terminal rates? Investors undecided about the implications of that, certainly as far as inflation is concerned, particularly in the US. Let's get some detail for his thoughts. Pete McGuire joining us from XM. Pete, a very good morning to you. So, let's just start with investor sentiment at the moment. What do you make of it? Because it's been quite incredible, just that turnaround we saw from the bottoms we saw in June.
Absolutely, Andrew. Well, good morning. If you're looking about US equities, you'd have to have a big smile on your face and say, how good is this? If you're looking at Chinese property market, then you'd probably be pulling your hair out, selling your Rolex and your Birkin bags and trying to look at how you're going to manage moving forward.
So do you feel as though, have investors got it right? I mean, obviously they have since June, but is there that risk that we still have more lows to come, given that inflation remains elevated no matter where you look?
Well, exactly right. If you're looking at the UK, we're nearly 10%. They're at 9.7 July year on year. So it seems to be bouncing further higher. The weakness across retail sales globally are a major issue. Unemployment and wage growth. They're certainly every central banker's dilemma. And how high you rank or ratchet up rates is the big issue at the moment. So, as demonstrated by the RBNZ, 7 consecutive this week, I would say.
All right, well, let's go there. What's expected then from the RBNZ lifting rates again? How close are they to their terminal rate?
Well, they're looking at 3%, Andrew. It will be the 7th consecutive month. They're the first cab off the rank, and they've been very boisterous with their movement to the upside. So I'm not sure whether they've reached max or there's even further to push it higher. Property market is a major concern. You're looking at debt repayments and all those sort of issues. So their focus at the moment is to contain inflation. Let's see whether they are able to manage it by October.
All right, and of course locally we get the Reserve Bank minutes this week. Plus, as I mentioned a little earlier there, a raft of data, just particularly as far as a measure on what's going on in the labour force with that tightness, and we get wages and average weekly earnings and the like.
Absolutely, Andrew. And that's been demonstrated by the power of the Aussie over the last couple of days. It's back at 71, so it's been a nice move to the upside. That pullback as far as US, and it's been strong momentum builder. So maybe there's even further. The numbers may be a little bit better than what we thought. So maybe a 72 and a half handle could be on everyone's radar over the next matter of days.
So you feel as though that's going to be based more on local data rather than what's going on with the US dollar?
Well, I think there's a combination of many. I feel as though maybe that US dollar could come under a little bit further pressure. If you're looking at the US dollar index at 105.60, and then you could see a little bit of further softness. There's no rate increases in August, where they're Jackson Hole. September's their next cab off the rank. We've got this coming out of the state this week as far as building permits, housing starts, retail sales, manufacturing, and what other indexes? Industrial output out Tuesday. So I'm looking at all of those metrics and then take on board what happens to the US dollar.
Yeah, so, certainly that US economy, that resilience remains at this point, doesn't it, in the face of those rising rates?
Absolutely, and that's been very, very strongly bid up. If you look at what's happened in US equities last week, it was game on. And traditionally, August is a quiet time. Traders are away, or in the Bahamas, or playing on a banana chair in Connecticut, Andrew. So it's been one-way traffic over the last week. It's very, very strongly bid up with the Nasdaq up 2%. So I wouldn't be surprised to see even further upside over this coming week.